It was one of the saddest day for me that we had to let half of the team go. At some point, you have to make sure that the ship doesn't sink, right? I'm an immigrant. You could detect from my accent. I was on an H-1B visa. All I had was a credit card. So I started building myself. I was doing everything. I was just cleaning the office. I was doing the website design. I was doing the back end, front end. Everything was just me and my co-founder.
Well, Bam, thank you for stopping by, FinTech Leaders. Honestly, about time. Thanks for doing this. How's it going today in California?
Good, good, good. Thanks for having me. I'm Lake Tahoe, Nevada right now, but yes, I'm based in San Francisco. The weather is awesome here.
Yeah. I'm gonna be there early May. Looking forward to seeing you in person, and always nice going to San Francisco. But man, let's talk a bit about Mesh. I was telling you before we started recording that we have a few friends in common, and when I told them that we were gonna be recording this, they got very excited, and they said his story is crazy, asking about all the pivots and the ups and downs. So let's start there. Tell us a bit about that winding road, that roller coaster of the last 4 years.
Yeah, I mean, when you start, you have no idea where you're going to end up. So, and this time was no different. So, my first startup, we started as a hardware company. It was a ring that you could wear, and it would detect your hands gesture and then translate it to computer commands. And you could control a robot, you could control a drone with it. And we ended up building a cybersecurity SaaS software and sold that business. My point is, you always start with a different idea, maybe a different vision, and it evolves. And sometimes pivots are necessary. You need to know when you're like barking at the wrong tree and pivot and go after like what makes sense. So initially, when we started, I want to kind of do consumer, like many other B2B fintech companies like Yoli, like Plaid, or maybe like even a Stripe. Like I had an idea about like building this B2C application. It was just one app called Front App. You could connect your Robinhood account, your Coinbase account, and manage everything in one place. And we were coming, like the entire team was coming from enterprise SaaS background. So when we were building it, we were like naturally we were using all the basically top products like Plaid and Yoli to kind of build that connectivity layer. Because we were B2C, we were not like eager to build our own authentication and connection, but it was not working for us. And the reason is when you want to kind of manage a portfolio, you need more than just read access. You need to be able to trade, you need to be able to write, you need to be able to transfer. So there are different things that you have to do. So we said like, okay, let's go and build it ourselves. So we started building it in-house, and then kind of the usage skyrocketed. We had billions of dollars in connected assets on the platform, but it was extremely challenging to monetize it. It was 2022, things were ugly. There was no magic wand that you could wave and raise money. So you had to have revenue, you had to be like close to profitability and things in that nature. So I gathered a team and said like, we have to make money, forget about 2021. And we didn't raise crazy amounts. So we raised like maybe around like less than a 10 million, including my own investment. And over the course of like 3 years, like started 2020, 2021, 2022. And then we want to kind of pivot to something that is more meaningful and can generate money faster. So, and we said like, what are we doing here? Like we are all coming from B2B background. We have a strong background in API. We have built this in-house, this connection layer that is very versatile. It has read, write, transfer access. So why don't we launch the B2B product on Product Hunt and see how it goes? So we still had the B2C vision. So we just launched it, ranked top 3 that day, landed 5 customers day one. And so like, okay, that's it. Like we shut down B2C 3 months after that. So we moved everything to B2B. And now we have hundreds of customers, and we're working with top tier companies like Revolut, Coinbase, MetaMask. And we are basically, we become this connection layer. And now we are like doing some sort of a pivot. Like we did too many pivots, but this one is like more of a, like being more focused and dropping all the other things and be more focused on the stablecoin, payment and things in that nature. So one of the killer use case for this new product that we have is payment. And that's where the volume is, that's where the revenue is, that's where the product shines. And so we want to kind of focus on the payment use case.
There are a good number of stories across tech and fintech where that has happened, right? You start with B2C and you end up in B2B. It sounds like in your case, the talent was already there because you had a lot of B2B talent. But did you go through an adaptation process where you had to reshift, maybe not the core, but a lot of the nature of the company?
Yeah, it was one of the saddest day for me that we had to let half of the team go because they were coming from B2C background, especially on the marketing side. So in B2B marketing is totally different than B2C. Like you're not managing TikTok and Instagram anymore. Like you have to be more focused on LinkedIn, create different type of content. You need to be thought leader. You don't need to work with like influencers to talk about your applications anymore. So it's a different game. So we had to let people that they couldn't adopt go, and that was hard. So I was trying to kind of postpone it as much as possible, but at some point you have to make sure that the ship doesn't sink, right? So with 2022 environment, so we had to do what we had to do. So that was a major thing for us. From product standpoint, it really didn't change that much. All we did is just we even kept the front end application because that was a proof of concept that this technology works. So instead of just being B2C focused, we started selling the API, basically the engine of the company. And what happened is we evolved from like selling the engine, now we're selling the cars again. So nobody wants to build on top of API. People want the product to be ready to just plug it in and use it. So we started building for different use cases, for deposits, for ramp, for verification, for payment, even though underlying engine or under the hood, the engine is exactly the same. But we had to build the entire car, give it a name, give it a brand, give it a price tag, and then start selling it. So that was the evolution after the pivot.
Let's zoom in on stable coins. Sounds like you are backing up the truck and just going all in on stable coins. Probably a great time to do that from a lot of points of view, but it's also a very hyped time to do it, right? So I'm sure you're running into competitors. So maybe kind of tell us first why focus on stablecoins. And most listeners of this podcast probably already have good amount of knowledge about stablecoins, but still, I'd love to hear your point of view.
Sure. So let's forget about Mesh for a second, the stablecoin in general. I'm very bullish because I'm like a data-driven person. So when you're looking at the data, when 2022 happened, the entire crypto market kind of crashed, everything went down, and the usage on the stablecoin was going up and up and up and up. There is no dip. So there is a reason. So like people say like a lot of it is fake or it's trading. But we had I think if I'm not mistaken, $37 trillion in transaction in 2024 on a stablecoin, which is more than Visa card and MasterCard combined. And if that's not enough, plus 7% on top. So that's the number, that's the magnitude of number you're talking about. And even if 5% or 10% of that is payment, it's going to be like, I don't know, $3 trillion in payment volume. To put that into perspective, a company like PayPal or Stripe, they're doing $1 or $2 trillion a year in terms of the volume. So the volume is very, very big. So if you can really tap into that volume, you can build a great business, you can serve a lot of companies, you can help a lot of people to move away from traditional financial institutions and rails. So that's a stablecoin. It is overhyped, but overhyped might be bad for a lot of players in a stablecoin, but it's absolutely a gorgeous thing for us. It's an amazing thing for Mesh. We can add value where things are fragmented. Just imagine that you're in North Korea, you have one bank in one portal, and you log in and you connect the same bank to the same shop, and everyone is using the same thing. We are not living in that world. It's super fragmented. So we have different regions, different countries, different banks, different stable coins, different chains, different networks. So the more fragmented the market is, the better or the higher value a company like Mesh can add to the mix, because we're kind of unifying that experience and connecting all of the nodes and offer that to the end user and also to the companies. So we work with a lot of these players that they were like in the orchestration layer, companies like Bridge, BVNK, we're working with them. And then a lot of exchanges and wallets and chains and stable issuers. So we are kind of Switzerland in the space, acting as a glue, connecting all of these players. And luckily right now, we don't have any competition to a degree that like does what we are doing. So a lot of time that we are going and selling to these companies, we go through buy versus build. Like, should I build it? And then there are 1,000 reasons why you should not build this. First of all, nobody wants to do the plumbing. We are like proud chief plumbing officer, happy to do all the plumbing for you, so you don't have to. You would rather to focus on your core. If it's your core is payment or exchange or wallet, be the best out of it versus just building integrations. So let us handle that part for you. And then how many integrations you want to build. And once you build it, you have to maintain it. It just doesn't make sense. So you would rather to buy an off-the-shelf product that does that for you. So that's kind of why in the hype market, overhyped market, mesh can still thrive and add value is actually good for us. And we're kind of working with all of these companies. We're not competing. We don't have any horse in the game. So we can work with anyone who is ambition is just kind of lead the market on that end. But like different regions, different basically use cases has different type of, it needs different type of orchestration layer. So I don't think we will live in a world that one orchestration layer or one player will win it all. And as a result of that, it's good for Mesh to be agnostic and work with anyone in different use cases in different regions.
Can I ask you something for people to understand? The clients that you're serving that are using stablecoins, maybe tell us the top one use case and related to that, go international payments, right? And related to that, what is it replacing? Like before this, what rails were they using typically?
Yeah. What is changing is like a couple of things, but I give you two examples. One is typical payment, and the other one is cross-border payment. These are two different things. So, but by payment, I mean e-commerce. You just go to a website, there is a PayPal, you click on PayPal, and then pay with PayPal account. That's payment use case. Cross-border payment is like something like Wise or Deal that you want to pay someone in another country, and then that's when and where stablecoin actually shines. So I give you both examples. On the payment side, what has changed is not a new technology. It is a new technology, but what has changed is the consumer behavior. So one of the things when you're looking at the data is just aspiring when you're looking at it. Number of crypto holders globally is 600 million users. Number of PayPal users is 400 million, 450. So we have more crypto owners than PayPal owners, PayPal users. So if you're showing PayPal at your checkout, you have to show crypto payment. And it got to a degree that if you don't offer crypto, people go and find another merchant that offers crypto, right? So people tend to own their assets in crypto, especially outside of US, outside of Europe, where there is a hyperinflation. They would rather to not go through FX every time they buy something. They would go to a merchant that accepts crypto, right? When you have your assets there, you want to spend it. So now here is the catch. Here is the big point. People owning their assets in crypto, Bitcoin, Ethereum, Solana, all sort of things, or meme coin, and merchants, they want to get paid in stablecoins. Like pay with Bitcoin is so 2019. Nobody does that anymore. Merchants don't want to own the volatility. They want to get US dollar or euro backed or pegged stablecoin, right? So someone needs to do that conversion, and that's kind of the value Mesh can offer here. So crypto market cap is 4.5, 4.7 trillion, maybe now 4.2 after the market kind of took a nosedive. But stablecoin is around 200, 250 billion. So it's like 20x more higher market cap. So people own their assets in crypto, but merchants want to accept stablecoins. So someone needs to do that conversion, and Mesh can enable that. It's like the analogy I use is like Visa card. Like let's say you go to Europe and you swipe your Bank of America Visa card, They said like, no, we only accept like Deutsche Bank Visa card because your currency is US dollar. We need a Visa card that supports euro, right? That doesn't happen to you. It just all happens behind the scene automatically by Visa or any FX provider behind the scene, right? So that's the same thing is happening, and Mesh is going to be that network that enable that, because we have more than like maybe we have 50 currencies like globally like that we care about, but in terms of when it comes to crypto, we have thousands of chains. We have meme coins, we have Dogecoin, we have, I don't know, big like Bitcoin, Ethereum, Solana, and also we have stable coins now. Stable coins are not made equal. Every bank will have their own stable coin. Every country will have their own stable coin. Every company will have their own stable coin. So the result of that would be an extremely poor user experience. That's where Mesh shines and can basically unify all of them. So the user just connect their account and pay with it, no matter what's happening behind the scene.
On that point, I mean, USDC, Circle's US dollar stablecoin, and then USDT, which is Tether, those seem to be by far the most demanded ones, the most popular ones. Is there demand for other currency stable coins or none at all?
There are. So China just announced they're going to do their own like government-backed stablecoin. A lot of countries like Brazil and India, they have good trade relationship with China. So I'm sure that's going to be the next big thing. States in US, they were thinking about issuing their own stablecoin. The state of Wyoming is kind of leading on that end. We'll have companies like Google, Microsoft. I'm sure Facebook will come back to the mix this time with a stablecoin. And it just makes sense because if you have a global presence and people have to pay you, or you are offering peer-to-peer payments across the globe, you have to have your own stablecoin or use some sort of a stablecoin. I don't think Tether and Circle will be the like two winner forever. As of today, they're like owning the most of the market. I'm very bullish on PiUSD or PayPal USD, and I'm very bullish on Ripple USD. In Europe, I know Revolut issued their own stablecoin. I don't know where they are, but that's also another big thing. The reason that these companies can be successful because they already have distribution. Ripple has distribution on the B2B side, so they can leverage their stablecoin to kind of for the B2B payments. PayPal has again 400 million users. It's easy to make PiUSD the payment currency of the world. So that's kind of where the power is, versus Circle and Tether. Their main power, the main differentiation was like it was accepted everywhere in almost every exchange. That is changing and changing fast.
Let's talk a bit about your philosophy on building product. I know that you mentor founders who are getting started. You're also an angel investor in many of them. We share some in our portfolio. What is your philosophy on building great product now that you've done it more than once?
Thank you. Yeah, I'm a big believer on paying it forward. I want to help first-time founders. If I see a great founder and they have a great idea, I tend to invest as well. Very small check. My value add is not the investment. My value add is basically time I'm spending with the founders. I know it's going to be very lonely on top of the pyramid. So and when they have no one to talk to, they can call me or text me or email me, and then I give them my 2 cents about the situation. I have a lot of scars in my back. I was not born successful. I'm not quite successful yet. I'm still like building my brand, but I went through a lot of trial and errors as well myself. So I can kind of, if I can share some of that, so some of those pitfalls with founders so they don't fall into a similar situation, then happy to help. In terms of like building a great product, I think I wish I was so genius that I would build Mesh Pay day one, right? So it took me 5 years to get here. There is no magic formula. The best practices is basically having an idea that solves a problem for yourself and also for another maybe 1,000 people, and then start like tweaking it and get feedback from customers, and don't be afraid to ship it. If you don't ship, it doesn't exist. So you need people to get their hands on it and then try it and then give you some feedback and then go reiterate it, and then until you find that like golden product that can sell for itself. It requires a lot of resilience. It requires a lot of hard work. It's not easy, but there is no better time for being a founder than today. You have a lot of tools. You can be a one-man company. You can build everything with Cursor and many other tools that are out there. So you don't need to have like a team of 20 people to start building a product. So if you have an idea, go for it. I think two areas that I would suggest founders to work on. One is definitely AI, and second is stablecoins. The stablecoin is here to stay for the next 20, 30 years. It's going to be the backbone of global financial system. And if you can get piece of that, you can build a very, very valuable business, as valuable as Stripe and Visa.
Going back to how the landscape is changing and how building itself is becoming more efficient, we see it every day in our portfolio companies. What we're seeing, and I want to get your take, is that product design and engineering, they're kind of merging into one thing. In some companies, design is more stronger, and so they are taking over some of the tasks. In other companies, engineering, others is product. How do you see this going forward? I think this is an interesting shift that we're going through.
Right. So I was a developer myself. I can code. So, but probably if I code, people just throw it to the trash can right now. I'm not the best coder out there, and I don't want to be the best coder. But when I go back to my old days when I was like the software engineer and doing all the stuff on the ground, one of the things that was bothering me, a lot of things that you have to do manually when you're coding. So you're paying a software engineer, I don't know, like $50, $100, sometimes $500 an hour. And all they do is just cleaning code, documenting, writing, like copying and pasting a piece of code in 10 places in the code, like in the entire project. So these are things that AI can solve. So you can focus on an idea, on iterating to build a better product, being more thoughtful about what can be done with this technology versus just copying and pasting and doing a lot of nonsense that can be done by a machine. So I really, really like that aspect of the AI that can solve that. The example of it, the day-to-day example of it is writing, right? I'm a terrible writer. If you give me a blank page, I don't know what to do with it. So you have to write a lot of words. But if you have an idea and ask AI, like, can you write a very polished article about this? And then I want to kind of explain 2 sentences, 3 sentences. This is what I want to get across, and it will do the job for you. And it's still the same message. It's your idea, but somebody else has done it. I think that would be the future. And I think that means a lot of people who were not capable of building codes, but they had great ideas. Now they're capable of building products, building companies. So we're going to see a renaissance, a revolution coming up soon, because AI is democratizing access to product and access to being a founder, access to having a great company and building a great company. So it's going to be awesome.
A lot of companies thinking about that right now, especially the legacy ones, because they're realizing that the gap.
If it works, don't touch it.
Speaking of that, that's actually a topic I wanted to talk about, which is future challenges of crypto. I mean, I think crypto users in 2018, 19, the interface was terrible, but if you were interested in the category, didn't matter, you would jump through the hoops, right? The last few years, it's gotten better. Some companies are doing a especially good job at that, in like productizing it and making it as seamless as any other company. So that's improving. We're not there yet. What are more fundamental challenges, or maybe other challenges that crypto is going through, and then you think the industry as a whole needs to solve?
User experience. So that's something that we need to solve. Like if right now, if you want to deposit, you have to copy and paste wallet address. You have to pick your asset. You have to pick your token. What is it? Is it 1990s? Like we have to change that. Like people want to make it as easy as possible so they can connect their account, move assets, be able to trade on the go, be able to pay with their assets when they walk into a store, no matter like if the store even accepts crypto or not. Like there are a lot that we need to do collectively as an industry to make that user experience better. I think if you think about it, compare it to the banking and traditional financial institutions, the evolution. So we had like these local banks, then we had the regional banks, then we had like national banks. Now we have international banks, right? And then at some point they said like, okay, we have to connect all of these banks. We cannot just move cash from one place to another. So they start building ACH and Wire and all these sort of like services around it to connect these banks. So it took banks 200 years to get there. For crypto, in the last 15 years, we did a great job in building a better secure systems. So we built MPC, by we I mean like the industry is collectively. We built a lot of technologies to make sure that crypto is as secure as traditional financial institutions. As a result of that, we see less hacks, less tragic events and things in that nature. And then also another thing that happened was regulation. So now crypto is not just used for dealing drugs and things in that nature. It has a lot of negative and trauma in that mixed bag with it. So that is gone. Like now it's more regulated. A lot of banks are using it. Governments are using it. So that's good. Now it's time to connect all of these nodes. So we have hundreds and thousands of exchanges and wallets, and we have chains. And this is the result would be bad experience or horrible experience for end user. And connection, what Mesh is doing, and that's our mission, is going to change that in next 5 to 10 years. And that makes it easier for people, day-to-day people to use it. But if I have to pick one battle for crypto industry, crypto veterans to win, is the user experience. Enough of building new chains, more efficient chains, more secure chains, like focus on the experience. That's going to be the future.
Are you following the stablecoin act that is advancing through Congress? And if so, what are
Genius Act.
what are the repercussions?
I really, really like the Genius Act, and also the naming is genius. But I think let's not forget, it's just mostly focused on payment use case for stablecoin, which is like, from my perspective, the killer app of crypto is a stablecoin. The killer app of a stablecoin is payment. So I'm glad that this is getting more regulation. We are all adults. We can take bad news. We can take good news. But in the last 5 years was like no news. And that is changing. And the reason we love any sort of news is because we are building rails at Mesh, and regulation acts as a guardrail. The moment it becomes available, we implement those guardrails. It makes us more appealing for traditional financial institutions. It makes us more appealing to more risk-averse companies. They feel like, okay, this is regulated, I can use this rail now. All right. So I am pro any sort of regulation, and a stablecoin act is no difference. But in this case, it's actually very, very good. It's letting banks to be able to hold crypto and a stablecoin on their balance sheet without like counting that as a high risk asset. And also it helps them to evolve and build things around stablecoin for the payment use case. So it's brilliant.
Final question, man. I read that you raised almost $100 million in a month. I don't know if that's exaggerated or not, but what have you learned about fundraising?
So for the first 10 million, took me 3 years. And then we raised our Series A in maybe 6 months or so. Like we went through cycles. We went through a pandemic, and then we went through a crypto crash. And then when everything was good, we were like closing the round. And one of the big investors that we have, after 20 years, they decided to change their CEO at the same time they were closing. So it took us 6 months to close our series. And then we have closed Series B in less than a month. So, and I think the reason was like the market was in the right place. I was not raising money. We had cash, and I was just updating investors that I wanted to kind of build relationship. And they felt like there was a competition. And when there is a competition, people move fast. So we're able to kind of use that momentum to close 82 million Series B. Now it's around like 90 million. So we raised more because after we announced it, there were like more strategic investors that they want to kind of get piece of that as well. In total, we raised under 40. 130 million.
What advice would you give founders that are raising?
It's probably they don't like it, but I will tell. So don't let funding kills your efforts and ambitions. I give you a quick background on myself. I'm an immigrant. You could detect from my accent. I was on an H-1B visa. I had to transfer from H-1B to my own company's H-1B, so I had to win. There is a lottery. It's not as big of a lottery, but there are there is a cap. Like 50,000 people get visa. The rest have to apply again.
And it's
See,
more and more competitive every year.
Yeah, it gets more it gets more competitive every year. So I was lucky to win that lottery. So I got my H-1B, and I was able to remain in this country and continue my startup. All I had was a credit card. So I started building myself. I was doing everything. I was just cleaning the office. I was doing the website design. I was doing the back end, front end. Everything was just me and my co-founder. And we're doing everything without any other person. And there was no AI, there was no tools, and there was no money. If I could make it, you can make it. So no excuses. My suggestion for founders is just keep building, shipping great products, collect feedback, and then start selling your companies to people who are early adopters and make some revenue, and then the funding will follow. There is no magic formula, and don't read too much news and TechCrunch and this raised 50 million over 1 month. There is always a backstory that you don't know.
Yeah. I've had on the podcast Alan Patrikoff, who's like a legendary VC, and he raised his last fund was in his late 80s. He's still going. He's 90 now. But he raised it within a month, and everyone was saying, like, oh my God, you're so great.
How did you do that?
Yeah, how did you do that? And how did you do it in 1 month? He said, like, no, 50 years in 1 month.
50 years. That's right. For me, 15 years in 1 month.
Exactly. I love it.
I started 2010. So
Bam, amazing having you. Thanks for doing this inspiring story. And I know that you're just getting started. Let's get together in SF when I'm there. And thank you for taking the time.
Thank you. Thanks for having me. I appreciate it. Thank you, Mayo.
The Fintech Leaders podcast is for informational purposes only and should not be considered financial or investment advice.